The views expressed are solely those of the speaker and not necessarily those of Paltalk.com, AVM software, or its advertisers.
News Talk is online. News Talk Online is a production of Paltalk.com, the largest multimedia interactive program on the internet with more than 4 million unique users. On demand on iTunes and on YouTube and on my site, GaryBaumgarten.com, where you are encouraged to post your comments whether you agree with yours truly or not. And thanks to our good friends at CRN Digital Talk Radio, we're syndicated to an additional 12 million households. I am your host, Gary Baumgarten. Welcome to the show. Well, the market is up, I think, about 500 points at the close on word that the government is going to purge toxic loans by creating a public-private investment program to the tune of $1 trillion. Some say we're mortgaging our children's futures, but proponents say this is the only way to give banks the confidence to loosen credit so people can buy homes, cars, appliances, and electronics and get the nation back on good footing. But it does nothing, as far as I can tell, to help those who have already been burned, purged themselves, sometimes from their very homes. Is this bailout necessary? Do you feel comfortable with any bailout following the revelations that money spent on previous programs was used to buy corporate jets and such? Do you agree with economists that this is absolutely necessary in order to stabilize the banking industry and to, by extension, stabilize the economy? Or are we just setting the economy up for an even bigger crash further down the road? Let me start with Alan Jacey. Are you with us, Alan?
I am.
Alan, first of all, was this program from the Obama administration particularly surprising, and why does the street like it so much?
Now, Gary, I don't think it's a surprise. I mean, I think we've been talking about this for weeks. I think the big surprise is basically is what took Geithner so long to present this. This has been on the table since September. I mean, the markets have been talking about how to deal with the toxic assets that we've all heard about. So this is it. This is the program that finally does it. It's not a bailout. It's basically what they're doing is they're throwing a pool of money that's going to allow investors to come in at somewhat of a discount to buy into this program, to buy these assets or these toxic assets, and hopefully make some money on them, assuming that they return to full value. That is the basic idea behind it, is that it will free up the banks, provide a little bit more liquidity. We are not lending anybody money in this case. My understanding is that we're basically guaranteeing the loans, that or guaranteeing this pool and guaranteeing this financing that's going to occur for investors to come in and buy up these toxic assets at a discount, and you know, hopefully, like I said, taking at least for the time being, taking these toxic assets off the books of the banks that have been weighed down by them, and possibly to free up some money. Now, they've been getting a lot of money to begin with, and what have they been doing with it? Well, they haven't been lending it. They basically have been, or if they have been lending it, they basically have been lending it to only people with AAA credit, and not what got them into trouble before, which is, you know, any Tom, Dick, and Harry that wanted to come in and buy a $750,000 home, and they could only afford a $250,000 home. They were basically getting the loans anyway. So right now, you know, this is not a bailout for the banks, but like I said, it certainly helps them with their balance sheets and does free up a little bit more cash that hopefully they will invest. I mean, and put back into the market. The market seems to like it, so I would say that it's what, again, I think, Gary, we mentioned it like 3 or 4 weeks ago, and I thought Geithner would have spoken sooner, and I said at the time, when Geithner speaks, if the market likes it, the market will either jump actually it was 700 points, was the number I called at the time, or it would go the other way, 700 points. So 500's not bad, but I thought that it would have been brought to the market a lot sooner than it did, and I think that that's why Geithner has been really been beaten up for so long, is because he has been waiting for the longest time to come up with a plan, which again I think has been on the table since September, and bringing it into the public domain, and then the market voted today, and they seem to have liked it.
I'm going to skip on the list to our consumer reporter, Kim Lifton, who only can stay with us for a few short minutes. Kim, from the advocate of a consumer, how palatable is all of this, in your opinion?
Well, I was going to ask you that. I can't pretend to be an expert on finances, and I'm wondering about this may or may not be related, but what I've been wondering is, there are all these people out there who sold really risky mortgages to consumers everywhere. Now the people who bought houses who couldn't afford them are losing their homes, and the guys who sold them bad mortgages are now running to Washington and trying to get special permission from the banks to now help these guys rework their loans. And I'm just wondering if anything in this package is going to protect the consumers from the same people who gave them loans they couldn't afford in the first place. And I don't know if this makes a whole lot of sense, but that's kind of what I was thinking. So help me out here. Hello?
How,
Gary, you
Alan,
lost.
does this,
There you go. You're back.
I'm here. Okay, this is exactly the question that I asked on the blog, GaryBaumgarten.com today. How does this help those who have defaulted on their car and home loans, Alan?
Gary, this program is not designed for that. This is strictly a trickle-down program. They're hoping that by fixing Wall Street, that it will trickle down to Main Street. What they're really trying to do, in my opinion, and again, this is just my opinion, is that they're trying to make the market palatable for investors who have been sitting on the sidelines with a lot of cash to come back into this market, to prop it up, hopefully to have a good momentum to capitalize about what happened last week, where the market closed up 15%. Over its low that it had been, I think it was like a 27-year low. So I mean, this is what the market is, what they're hoping that it'll do.